Laura Stuffins, Director at BDO in Liverpool. We are a firm of accountants and business advisors, and as Mark says, we've been working very closely with the growth platform over the last 6 months. So very pleased to be invited to speak today on the subject of unlocking cash in your business. We have all heard, haven't we, the phrase cash is king, and I think now more than ever, businesses' ability to effectively manage their cash flows and how it determines how they can respond in this uncertain environment. So today what I want to do is think a little bit about the cash cycle or the working capital of your business. Remember, this is your working capital. It's interest-free finance. It's the cheapest and fastest source of cash for your company. So today I just want to go through some elements of this and how you can really maximise free cash up in your business. So here at BDO, we work with businesses of all sizes. They all face similar issues and challenges around working capital. But I think one of the mistakes a lot of businesses make is actually not managing all the relevant elements of the cash cycle together. Often cash becomes the job of the finance team. It's all about credit control and cash collection, but actually really thinking about the working capital cycle from beginning to end. So from procurement right through to setting your prices and then receiving your cash in, how you deal with stock in the business, etc. And embedding some good practices across the business can have a real tangible impact on the amount of cash that you're getting through the door and the speediness of that cash. So here are all the elements of the cash cycle that I just want to think about today. Some will be more relevant than others to your business, but I think all of them interlink and should be managed together. So firstly, sales, starting in the top right-hand corner of the diagram. So sales are your window out to the external market, and it goes without saying that any decisions that you make here ultimately affect the cash that you're getting into your business. The contracts you issue to your customers, your invoicing terms, your sales prices, your discounts, your incentives, they will all affect the amount of cash that you're getting in and the timing of that cash. So I guess having a think about, are there any changes you can make there in order to reduce the amount of time that cash is outside of your business? Could you consider billing more in advance? Could you take some more deposits on orders? Could you increase the deposits perhaps you're taking on orders? Or simply just ensure you're getting your invoices out at the earliest opportunity? Perhaps talk to your sales team and see what the possibilities are there. And actually one area we've seen a lot of change in the last few months is the use of discounts and incentives. So I think it's all too quick to slash prices, offer discounts, incentives to get sales over the line and to get cash into the business. But just be really careful about which lines actually are maximising returns. One of our businesses, a retail customer, actually that was one of the first things they did during the lockdown period, was actually properly reviewing all their product lines and the discounts that they were offering there to make sure they were maximising return, they were getting cash into the business, but not at the expense of the profitability. Revenue leakage, this is an interesting one. Are you inadvertently giving things away for free that you could be generating cash on? So it might sound daft, and probably less so if you're selling widgets, but certainly in service industries, are you actually giving some value away to customers there that perhaps you could monetize? And I guess lastly on sales, just please make sure you're not making any decisions here that can really affect the contribution that your sales are making to the overall profitability of your business. They might be bringing cash in, decisions you make might bring cash in the short term, but please do look at the long-term sustainability of some of the decisions that you're making there. Linked to sales then are debtors, and I know there's a couple of the speakers later will be talking a little bit more on debt management and invoice discounting and the like. But I think simple actions here can make a really, really big difference. So do you have the ability to lock accounts so salespeople aren't inadvertently taking orders on problem accounts within the business? That can make a massive difference to just cash and how that's managed. Look at inefficiencies. Are there any areas in the process that are causing delays with you getting invoices out the door? Is there a lot of manual process, for instance? Do you have a high volume of invoices? Are you leaving all your invoicing to the end of the month? That's adding days on to cash that is out of your business and not in your account. There's systems nowadays that can automate a lot of that work, so please do have a think about that, and if you need any help on that, do reach out to me. Dunning, also known as your collection management system, obviously a vital part of credit control, so making sure you have routine processes, setting alerts on reminders on invoice dates, upcoming payments, chasing routinely, and making sure you have an escalation process around that. Moving down the diagram then, supply chain management. So as I said, it's not just about sales, invoices and managing your debtors. Actually, reviewing your supply chain at this time can have a real impact on how cash is moving in and out of the business. It's something that we're seeing with businesses becoming more and more important at the minute. And this isn't just about squeezing the supply chain, taking longer to pay your bills, eking out a few more days credit. Yes, it's a fine balance, you know, in your working capital and when you're making those supplier payments. But what actually we're seeing is supply chains working together in a way that we haven't really seen before to make sure that there is sustainability through all the changes that are going on. There's tough choices to make in your supply chain. It's all about price. It's all about, you know, the discounts and the negotiations that you can come to. But really understanding your supply chain from end to end to see how cash is moving in that supply chain can have, you know, it's just really beneficial. So what do I mean by that? So yes, check all your payment terms, pay on time wherever you can. You don't want to end up with any reputational or credit rating issues, but please just don't make any assumptions around your supply chain in terms of robustness and certainty of supplies. Just because somebody looks cheaper, gives you more credit, doesn't necessarily mean they're sustainable, and that actually can have longer term consequences on you in terms of your cash squeeze. So an example of this I just want to share with you is actually a medical business that we've been talking to who needed to source some small springs for their medical devices. So they found a supplier, they were efficient, they delivered on time, great payment terms. But when actually we looked down the supply chain and we did some work around the robustness of that, what we found is this supplier was actually, their main market was supplying into the car industry. And during COVID, they had diverted supplies and diversified, but that was only a short-term measure. So whilst this medical company had thought they'd found you know, a really good cheap supplier of these springs, actually it was only a short-term measure, and they've had to redo you know, negotiations elsewhere and sort of find new suppliers. So what looked good on the surface actually didn't end up being good you know, in the longer term. And again, that has impacts on your cash and the time that's being taken to negotiate around those supplier deals. What we've seen with supply chain, especially over the sort of the first 3 months of the lockdown period, where business were reviewing their supply chains, is that long supply chains, including just in time and offshoring, just weren't working and were very exposed. It became very clear that it was about just in case rather than just in time. And actually businesses were broadening their supply chains and nearshoring a lot of that activity. Obviously, when you're buying goods from further away, that means often paying for goods up front and paying for all your duties up front, which of course is cash out of the business. The goods take longer to get into the country to be turned around and out to customers. So therefore elongating the cash conversion process. So it's worth just thinking about, sometimes nearshore suppliers, their prices are higher. It might be more expensive, but the resilience that gives you and the shorter lead time that actually gives you means that potentially you can convert cash quicker in the business. Expense control is the next area just to touch on. And obviously this is something that businesses are really looking at the moment. And I think, put simply, if your operation expenses aren't driving you profit and cash, you shouldn't be spending that money. So do keep an eye on that, check you've got approval processes in place, and your spend is being monitored against your budgets. Review your suppliers, look to negotiate some better deals, especially on your higher volume suppliers, but also review the contracts that you have in place. And actually, so some work we've been doing reviewing contract management down the supply chain has shown that weaknesses in contract management can actually be accounting for between 5 and 15% of turnover being leaked out of the business. That is cash that is in someone else's pocket and not yours. So just reviewing all your contracts and your supplier processes could have some really tangible benefits. Investment, we've put on here, whilst investment might be, significantly curtailed at the moment, just still, if you are needing to invest, to diversify, to move into kind of a new area as part of your adaptation, then, it goes without saying, just really revisit the return you're getting on that investment, prioritise though, and prioritise what you really need. And if you need to seek finance around that, it's often cheaper to do it at the point of purchase rather than revisiting later on. Inventory, typically a lot of cash gets tied up in stock. So monitoring what you buy as well as what you sell is really important. Promoting really good communication between your teams, your departments to forecast your demands as much as possible, therefore preventing any unnecessary stockpiling and minimising other costs such as storage, insurance and things like that. Near sourcing, I've mentioned before, can just cut those lead times and speed up cash collection. The two final areas just to touch on here is around actually your ability to monitor your working capital and to have visibility over that. I think it's clear to say that if you don't have visibility over the movements of your working capital and cash in your business, then you're going to find it really hard to relieve those shortfalls. There are lots of tools out there that can help you with this. And if I just click down briefly, these are some of the examples, and they will give you instant access to cash flow in your business and what actions are you can take to really be driving cash back into the business. And this information should be at your fingertips as much as possible to make sure all of those areas are just outlined on the right hand side of the diagram. You can really be successful in doing. So do have a think about the information you have in your business that allows you to make those decisions around your working capital. And then lastly, is just around some of the structural areas of your business. So if you have any non-profitable, non-cash generating units, have a think about the leakage that's causing in your business. Are there any functions of your business perhaps you could outsource that are taking you too much time and might be cheaper to do so? And do you have any existing debt that you think really you could relook at, restructure to minimise your repayments and minimise the cash out of the business at this time? I know some of the other speakers will come on to talking about that. Lastly, what I just wanted to share with you, which I think is quite important in terms of cash management over the next few months. There's obviously a lot of change out there in the landscape, and there is cash implications of that it's worth just having on your horizons. So as it stands, at the end of October, the furlough scheme is coming to the end. So the 30th of November is the last day you could submit claims. That's for periods ending on or before the 31st of October. After this date, you won't be able to submit any claims or add to any existing claims. The Sybil scheme is extended until the 30th of November, so that was launched back on the 24th of September. So that's another deadline to be aware of if you're looking to get finance into the business through that mechanism. In December, the restrictions on the commercial landlord's ability to take enforcement action on commercial tenants who are in arrears, that will come to an end. So again, maybe implications there in terms of cash out in the business. January, of course, we have Brexit, so there may be more cash up front, slower moving of goods coming into the country, tying up of cash around the ports and your imports to be thinking about. And then March is the repayment date for any deferred VAT from the period March to June of 2020 this year. There is an option there to defer to March 2022 if you opt in and make smaller payments over a longer period of time to help with your cash flows. So I'm hoping that's sort of given you a sense of what you can do that's internal to the business, what management can perhaps be looking at to unlock some cash within the operations of the business, and hopefully that's given you some tangible ideas there of things to look at and to be aware of as you're managing that.